What is up, guys? I'm back yet again with another one. Today, I'll be discussing the importance of keeping everything simple. Okay, so simplicity is key when it comes to trading, all right? The thing is, we need to come to the conclusion and understanding of what trading truly is, okay? So trading, as I've always said, is a game of using the past to predict the future, all right? So one needs to understand that everything that is in front of you when you open up any chart is what I call the past. It's basically past information that is relayed to you via different time frames. Okay, so the daily time frame communicates to you information on daily trading activity from today and the past days. Similarly, right, if you are on the weekly time frame, the information being portrayed, or should I say being displayed right in front of you, is weekly trading activity. So it's trading activity from a weekly period interval. Similarly on the H4 time frame and so forth. All right. So basically, in a nutshell, trading is using information, past information, so that we can predict, or should I say speculate, what the market could possibly do. So we obviously know that when it comes to trading, there's two ways you can make money. You can make money from either selling or from either buying. All right. So any trader's ultimate wish is, for instance, when they press the sell button, that the market will actually go down, because that symbolizes profits. That's what we call a supply movement. All right. And then similarly, we also would want to, when we press the buy button, we would want for the market to go to the upside. That is a demand movement, and that would simply reflect profits on our side. That is every trader's wish. So with this information, such basic information, we can really arrive at the fact that simplicity is key. All we need to do when we get a chart is to figure out from the past, where have we had high demand, and also where have we had high supply. Okay, so this is definitely relayed on your chart. And now, what most traders don't understand is that the higher the time frame, the more reliable the information that is being relayed to you. What do I mean? What I mean to say is that you cannot compare information that is displayed on the 1 minute chart, for instance, with information that is displayed on the daily chart. And obviously, common sense will tell you that the daily chart would have already had past trading activity over a longer period of time. Hence, it would tilt the probability in your favor to use a higher time frame so that you can better speculate what the market is about to do. So with that being said, I want to show you guys how you can keep everything simple by focusing even on the daily time frame. Okay, so now, when we want an area where there's past high supply and past high demand, I want you guys to look at impulsive, or should I call them significant movement. So what is a significant movement? A significant movement to the upside would obviously be impulsive in nature and over a long period of time. And similarly, a significant movement to the downside would also be impulsive to the downside and over preferably a significantly longer period of time. So what you want to do, right, is to buy, right, at an area where in the past we had this high demand, right? And then you want to say to yourself, if I'm wrong, I'll place my stop loss and then I'll get out, okay? Because that's what it is. We're just trying to use the past, all right? But now the thing is, this is real life. The past doesn't have to always repeat itself. This is why trading is not 100% game. This is why you have to still incorporate good risk profiling. You need to understand your risk management protocol to say that if you're wrong, you get stopped out. But if you're right, because of what happened in the past, there's a probability. I could even say there's a high probability that you could make profits. All right. Similarly, you would obviously want to sell in an area whereby in the past we had a high supply, and you place your stop loss, right? To say that if I'm wrong, I get kicked out. But if I'm right, this is what I'll be getting. So in a nutshell, trading can truly be that simple, especially if you understand the reliability that is included in the higher time frames. And this is why the more patient you are when it comes to trading, the more consistent you obviously become, because this would require for you to wait over a long period of time. Okay, so now let's just backtest on the daily time frame right now and look at how price has behaved All right. The reason why I want us to use the daily time frame once again is because of that reliability. So we want to look at in the past how it has behaved from areas whereby we had significant movements. Okay. So quite quickly, right here, I can see that the market, this is the daily time frame once again, was to a certain extent just halted here for 3 days straight, right? And then after those 3 days, we significantly moved to the downside. And to a certain extent, one could actually say that this movement was impulsive, simply because we had a sequence of just red candles. Now, for that to occur, there must have been more supply generated in this region, hence the market ended here, right? Ended up here. More supply than demand in here. Now, because trading is a game of using the past to predict the future, if you are clever, what you want to do is to wait for price to come back in there, and then you hopefully tap into that same supply that was present here. So this is what would make you sell over here, and then you would actually want to place your stop loss right above to say that if you're wrong, you get out. But if you're right, you have the probability of getting all of that. Okay, so quite simply put, that's an example of an impulsive movement from the past that one could have taken advantage of on the supply side. And let's keep backtesting, and I can already see on the demand side we have something over here. It's very important that you have an observant mindset, that you observe what's actually happening, especially when you're backtesting. This is how you can possibly improve. Okay, so over here, once again, the market was basically halted for almost 2 days over here. And then guess what? Impulsively and significantly, we moved to the upside. For that to occur, mind you, that would mean that there was more demand in this zone, right? More demand than the supply, hence the market moved up. So no one can hate you for waiting there, because once again, no matter what someone else has told you, no matter what indicator, no matter what other method someone is trying to tell you, I have said trading is a game of using the past to predict the future. The only thing at your disposal is these candles, this information from the past. So you need to wait at areas whereby things happened in the past, and you try to take advantage of the probability of those things repeating themselves while incorporating a good risk management. So once again, over here, you could have entered a buy, and guess what? That means profits, right? And your stop loss would be here to signify that, look, if I'm wrong, I quickly get out. And it's all a numbers game. You have to really stick to the numbers. It's all about the numbers, okay? And even here, right, you can clearly see that the market had been going up for so many days, right? And then guess what? We moved to the downside. So now, this is the thing. This movement to the downside is not so impulsive and is not so significant. So trades over here would actually be, to a certain extent, more risky, but still, because it's the daily time frame, right? And you're using this supply that had occurred in the past, and you wait here. Yes, the zone was ended up being breached, but I want you to understand that if you entered here for 3 days, you're actually in profits. You understand? This is why the higher time frame, either way, will tilt the probability in your favor. After the market has finally breached the zone here, maybe you would have placed your stop loss at entry and you would have been covered for that loss, okay? But now, still, let's just maintain and look for those areas where we have a significant movement that is impulsive in nature, and they're not hard to spot. Those are the areas that you can spot as soon as you open up your chart, right? Like over here, you can clearly see that for so and so many days we were going up, we halted, and we significantly and impulsively moved to the downside. Now, because of that, once again, we want to be present when the market comes back. And look at that, right? Of course, at times you get slight stop hands. So what I'm going to do is I'm going to advise you to always give your stop loss breathing room. Don't over leverage your account. You don't need to. And then what you want to do is to enter from those areas. So now this is the whole premise behind us considering market structure. We all know that I'm a supply and demand trader. I only trade within the market structure because, once again, we have said that we have an uptrend, okay? And then we also have a downtrend, okay? All right? And we have said that we want to always sell in a downtrend, all right? At what we call the highs. And we want to buy at the lows in an uptrend, right? In a market that is portraying that demand. It's all the same thing. In an uptrending moving market structure, or should I say market, basically you will find that those areas of demand where we want to place our trades are areas in the past where we showed buy interest. Okay, in a downtrend where we want to sell at those highs are areas where in the past we showed sell interest. And I hope you can understand what I'm trying to say to you. The past, the past, the past. That is what every chart is showing you. And the higher the time frame, the more reliable the information. And no one can blame you. For instance, over here, you can clearly see that we were halted for all these days. And then guess what happens? We moved to the downside. If you place your key point of interest in this region, no one can truly hate you. And guess what? That's actually profits on a daily time frame and so forth. And the thing is, you're not going to win all of them. It's all about the numbers. The numbers matter. The numbers matter. As you can see over here, same thing. For as long as you see that impulsive movement that seems to be significant, no one can hate you for waiting there. All right. So now, of course, when we are backtesting, that eliminates the element of time, right? To say that it's very easy for us to say, over here, I would have sold. But especially because we're on the daily candle, on the daily time frame, this would require enormous amounts of patience. All right. But this is why we have other strategies, right? For my students, I have said, when you wait at these key points of interest, we look at the daily candle strategy. Okay. My students know that. And you can even choose to scalp in a way that will do such great profit, that will result in great profitability. But all you want to do is to become sell biased here, simply because of what happened in the past there. Once the market is in here, you are going to then look for sell opportunities, whether you want to scalp it or whether you want to hold for all these days, which I wouldn't obviously recommend. All one needs to do is to take advantage of the supply in here, and then you choose, do you want to scalp or do you want to hold this over a longer period of time? Okay, so that's it for me today, guys. I just thought I would discuss how trading truly is in terms of its basic nature, that all we have, once again in closing, is supply, and all we have is demand, right? And hopefully so your good risk profiling. Okay, and you rinse and repeat and you practice this on the daily time frame, on the H4 time frame. Don't go too low. The lower you can definitely score some trades on the lower time frames, but we want to target your consistency. We want to aim for consistency, and the higher the time frame, the more reliable the information. If you like what you see, feel free to contact me for mentorship. Mentorship goes ahead. I have many different strategies that I incorporate in my very different packages, trying to tailor make for where you could be in your trading. So feel free to contact me. My contact details are in the description of this video. I also have a trade alerts and setup platform where we look at these zones, these highly probable zones, on a daily basis. Until next time, ciao.